In August 2025, one company didn't just go public. It staged a hostile takeover of Wall Street's attention, turning a planned $600 million IPO into a $13 billion spectacle overnight. This wasn't just about a stock ticker BLSH. This was about a calculated move by PayPal founder Peter Thiel and the former president of the New York Stock Exchange himself to finally solve crypto's billion-dollar trust problem. And by the end of this video, you will understand the theoretical framework of how the bullish IPO just set the stage for the next $1 trillion to flow into crypto. You're going to want to watch this all the way through because the final act of this story reveals a fundamental change in how crypto will be treated as an asset class forever. Stick around. To understand the explosion of the bullish IPO, you first have to understand the silence that came before it. The years following 2022 were brutal for crypto. The collapse of giants like FTX didn't just wipe out billions in value, it shattered the most important asset of all: trust. Institutional money, the trillions of dollars managed by pension funds, endowments, and corporations, fled to the sidelines. For them, crypto wasn't just volatile, it was the Wild West, filled with unregulated gunslingers and zero accountability. Traditional finance, or TradFi, was intrigued by the promise of blockchain but terrified of the reputational risk. They needed a bridge. A safe, regulated, compliant bridge to cross into the world of digital assets. And as the market languished, two very different figures were about to provide the blueprint. First, the insider, Tom Farley. If you wanted to create the perfect ambassador to Wall Street, you'd create Tom Farley. He wasn't just on Wall Street, he ran a piece of it, serving as the president of the entire NYSE group. He oversaw the IPOs of giants like Alibaba and Snap. He speaks the language of compliance, of regulation, of the C-suite. He wasn't a crypto zealot. He was a TradFi titan who, a decade earlier, made a small investment in a tiny startup called Coinbase and got a front-row seat to the evolution of an industry. He saw the potential not for rebellion, but for a more efficient financial system. He was the face of legitimacy. Then the visionary, Peter Thiel, the co-founder of PayPal, the first outside investor in Facebook, the man who built the data mining giant Palantir. Thiel isn't just an investor, he's a philosopher of progress, known for making massive contrarian bets on technologies he believes will fundamentally reshape the world. While Wall Street saw risk, Thiel saw revolution. His backing wasn't just money. It was a powerful signal that this wasn't a fleeting trend. This was the future. These two forces, legitimacy and vision, were waiting for a catalyst. And in the summer of 2025, they got one. The US government passed the Genius Act, the first major piece of federal legislation creating a clear regulatory framework for stablecoins. Suddenly, the fog of regulatory uncertainty began to lift. For institutional capital, which craves certainty above all else, a window of opportunity had just opened. The stage was set. All it needed was a star. Enter Bullish. From day one, the company was engineered to be the perfect institutional product. It wasn't just another exchange, it was a fortress of trust built in direct response to the failures of its predecessors. It was licensed in Gibraltar, Germany, and Hong Kong. Its books were audited by Deloitte, a Big Four accounting firm, a level of transparency almost unheard of in crypto. It operated on a full reserve model, meaning it didn't gamble with customer funds. And it was led by Tom Farley, the ultimate symbol of Wall Street credibility. But their masterstroke was the 2023 acquisition of CoinDesk, the industry's leading news and data provider. This was brilliant. Bullish now owned the platform that reports on the market, the data that prices it, and the conference where the industry gathers. They weren't just participating in the ecosystem, they were shaping it from the inside out. They had built a self-reinforcing engine of trust. And when this trust machine decided to go public, Wall Street didn't just respond, it stampeded. The initial plan was to raise about $629 million. But the demand was insatiable. The deal was upsized, the price range was raised, and it still wasn't enough. On August 12th, the Bullish IPO priced at $37 a share, far above all expectations, raising a massive $1.1 billion at a $5.4 billion valuation. Inside sources claim the deal was oversubscribed by more than 20 times. Look at these numbers: an IPO price of $37, an opening price of $90, a first-day high of $118, a closing gain of nearly 90%. This wasn't just investor interest, it was a desperate clamor for a piece of the action. Why the frenzy? Because Bullish had assembled the credibility trinity. Tom Farley solved the institutional risk. He was one of them. Peter Thiel solved the technology risk. He was the visionary who validated its future. And then came the final piece. BlackRock, the king of traditional finance, and ARK Invest, the queen of disruptive tech, both signaled their intent to buy in at the IPO price. This was the ultimate green light. It told the market that the smartest money, both old and new, had given its blessing. The risk was gone. Participation was no longer a bet. It was a necessity. We're about to get to the explosive market debut and what it means for the future of finance. But if you're getting value from this deep dive analysis, do me a favor and hit that like button. It tells the YouTube algorithm that in-depth financial storytelling matters, and it helps us bring more content like this to you. Now let's see what happened when the bell rang. August 13th, 2025. The opening bell rings and the market delivers its verdict. Bullish stock, BLSH, opens for trading at $90 a share, a 143% jump from its IPO price. It immediately halts due to volatility, then resumes, rocketing to a high of $118. At its peak, the company that was valued at $5.4 billion just hours earlier now commanded a market cap of over $13 billion. The immediate result was clear: billions in value created and a massive win for its backers. But the true impact isn't on a single day's stock chart. It's in the theoretical shockwaves this event sends through the entire financial system. The first is the legitimacy cascade. The success of Bullish provides the ultimate proof of concept. It's a regulated, audited, publicly traded crypto company that made its investors a fortune. This gives cover for every other hesitant institutional boardroom to finally make their move into digital assets. This IPO also becomes the blueprint for a new wave of crypto listings. It proves there is massive public market appetite for high-quality crypto companies, paving the way for others to follow and marking a new stage of maturity for the industry. But the most profound impact is what I call the Great Recoupling. For years, one of crypto's biggest selling points was that it was an uncorrelated asset. It moved independently of the stock market, offering a hedge. The Bullish IPO is a powerful force of correlation. By listing on the NYSE, Bullish is now tied to the fate of the broader market. And as more crypto infrastructure goes public, the digital asset economy becomes deeply intertwined with traditional finance. Crypto has traded its rebellious independence for a seat at the institutional table. It has gained legitimacy, but in doing so, it has fundamentally changed its nature as an asset class. This raises a fascinating and controversial question, which I've pinned in the comments below. I really want to hear your take on it after you've processed all this. So, the Bullish IPO was more than just a financial event. It was a paradigm shift. It was the moment the bridge between crypto and Wall Street was finally completed, built by an insider and a visionary, and funded by the biggest names in finance. It established a new model for success in the space, one built not on hype but on trust, regulation, and compliance. It unleashed a wave of institutional capital and, in the process, forever altered the relationship between the old world of finance and the new. The rebellion may be over, but the revolution has just become mainstream. This is the kind of in-depth theoretical analysis we do every week. If you want to stay ahead of the trends that are reshaping our financial world, make sure you subscribe and turn on notifications so you don't miss the next big shift. Thanks for watching.